Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual, guys, this is not financial advice. Please do your own due diligence and research. It's getting yummy for the tummy. It's getting very exciting. You see, NEO has learned a lot from its mistakes by cutting costs. And also, we are piling up all Onvo L90s in our parking lots, getting ready for shipment, so there will be zero wait time. They're even extending their parking lots, yes, you heard that right, to make room to put these L90s, proving that it is in high demand with massive orders already. And of all places, I told you guys it's only when Wall Street is ready to let us go. Of course, I have to thank Jeff, aka Neo San Francisco, for saying that. He woke my mind up. It's only when the whales with their propaganda, when they put their propaganda away and is ready to buy in, which is what they're doing now, and this is why the sentiment is changing. Of all places, the Motley Fool came out with this report. It says NEO, the Chinese EV maker, looks like an undervalued growth stock. What, money making Mitch? Yes, you heard that right. Didn't I tell you their tongues will twist in their mouth? It says NEO, a major producer of electric vehicles in China, has been a disappointing investment over the past few years. This is what they're saying, but we know it wasn't disappointing. They drug it down on purpose. It says over the past few years, its stock currently trades at about $5 compared to its initial public offering of $6.22 per American depository share. This was the IPO pricing, 2018, and its record closing price of $62.84. NEO initially impressed the bulls with its soaring deliveries, and the buying frenzy in meme stocks amplified those gains, they said. However, its stock pulled back as its deliveries slowed down and it racked up steep losses due to the pandemic. Rising rates drove investors back towards safer investments. The trade war between the US and China made stock even less appealing. Yes, the so-called trade war. Remember when they were saying, and a hot war, China may attack Taiwan? All the propaganda that they use to drag it down so their friends can buy. And I told you guys that this is the way the game is played. But as Warren Buffett famously said, now they're quoting Warren Buffett, investors should be greedy when others are fearful. And that's what we did, my dear lads. We were greedy when the sheeps were pooping in their nasty little pants. And there's a lot of fear baked into its current stock price. Yes, fear by who? By them. By the Pupavosian and the rest. Let's take a contrarian view. Now they want to take a contrarian view and see why NEO stock could be worth buying ahead of its second quarter report in early September. Number one, its battery swapping network is expanding. Now they recognize battery swapping. They didn't know it exists until now. NEO produces a wide range of electric sedans and SUVs under its namesake brand. But they said we should only stick to two. Its newer Onvo and Firefly sub-brands sell cheaper SUVs and compact cars respectively, our Model 3 moment. It differentiates its vehicles from other Chinese EVs with its swappable batteries, which can be quickly swapped out at its power swap station as a faster alternative to traditional chargers. Only now it knows that. Its drivers can pay for those battery swaps on an individual basis or subscribe to a battery as a service BaaS plan for lower rates. This is the way the game is played. They pretend to not know this and said it was cash burn and a waste. At the end of June, NEO operated 3,445 battery swap stations across China and Europe. That's up from just 777 stations at the end of 2021. Expanding that network is a capital-intensive effort, but it should increase the stickiness of its brand. Now they know that. I should probably be a paid analyst. It says widen its moat against its competitors and plant the seeds for higher margin recurring BaaS revenues. Recurring is the key word here, so I'll say it again. Widen its moat against its competitors and plant the seeds for higher margin recurring recurring BaaS revenue, money for years to come, dividend-paying stock in the future. It's also been working with several major investors, including China's battery-making giant CATL. Only now they know that. To fund the future growth of that network globally. NIO's annual deliveries more than doubled in 2020 and 2021, but only grew 34% in 2022 and 31% in 2023. That slowdown, which it attributed to tougher competition, macro headwinds in China, and adverse weather conditions and the tariffs, spooked a lot of its investors, but it did not spook me, my dear lads. When the market is fearful, I get greedy. In 2024, its annual deliveries rose 39% to 221,970 vehicles. And the reason why I did not have any fear is because I saw the business model. The growth was driven by its robust sale of NIO ET series sedans and Onvo SUVs in China, which boosted its domestic market share against its rival, as well as its ongoing expansion into Europe. We're going to connect all of Europe into China. NIO's deliveries rose 40% year over year to 42,094 vehicles in 2025 Q1. In the first half of the year, its total deliveries increased nearly 31% year over year to 114,150 vehicles, as its new Onvo and Firefight brands attracted more budget-conscious consumers. But we knew that was coming. NIO still has plenty room to expand, they say, in China and Europe in the coming years, even if its days of doubling its annual deliveries are over. But that's not over, my dear lads. They're still trying to downplay it. We're going globally. We're going into Latin America. We're going into North Africa. We're already into the Middle East. We're going all over Europe, and we're going to be going all over ASEAN nations. How you like them apples? I hope you guys found this video yet again to be informational, inspirational, and motivational. If so, guys, don't forget to hit that thumbs up. Takes a lot of time to do these videos and the editing. And if you haven't yet subscribed, you might want to think about doing so, because in this channel, we are waking up the middle class for the first time to get a major piece of the pie from the ground level up as to how the games are played on Wall Street. And like 50 said, we get rich or we die trying, guys.